what's our price cycles? I'll have you look at that as I kind of talk about this. Okay, so let's first talk about this real quick. So no, I'm going to talk about why you chose to place the trades where you chose to place the trades, okay? Because sometimes it's important to see that. Okay. So let's talk about that for a second. The other thing too is I don't like having this little green guy, because when you have the green thing checked, you can't scroll back. Or if you do it, it puts you right back. So let me take over. You guys in your crazy. All right, so what we're going to do here, because your monitor is weird, we're just going to minimize that, maximize that, and we'll just flip between the 1 and the 5 here. I don't know why. Oh, seriously, because your resolution size. Anybody tell me what price cycles are? I mean, not what the definition, the actual what price cycles that we're running right now. Because I know, but I want you guys to know.
Looks like 25 and like close to 30 were the last price cycles on the 1 minute chart.
Okay, so I was going to say, what time frame are you measuring? Pete, great answer. Nope, they're crazy.
22 minutes, 27 minutes. Last one for 31 pips.
Andrew, do you know how to measure price cycles?
Yes.
Okay, good.
Yep, we talked about that yesterday or the day before.
Okay, so there's a 12. And then there's kind of another 12 and then a run up. So I would say that's 2 for 24.
Okay.
And then there's another 12 that I could see, and then another 2, and there's 18. So, and then let's see, this one probably should be like 15. So I would probably say that our price cycles are probably between 15 and 20. So if we're 15 and 20, let's do something we didn't do yesterday. And let's adjust our trading to be conducive for the price cycles that we're in. So got to load the 1 minute template up in order to adjust it. And Andrew didn't do his job. Andrew, you got one job.
Oh, dude. My job was to fix my colors.
No. The job is to remind me starting in about
43.13 cents.
What is it?
43.13 cents.
Okay.
One job. Jeez.
Cool. Where are you starting at?
72.08, 68 cents. 72.08 and 68 cents.
Okay. Patricio, have you
5,000?
Oh, you're starting today.
Right.
Okay. I thought we were going to start Monday, but that's all.
No. This is a demo account on Beatrice's.
Oh, gotcha.
So
Okay.
this
Just so everybody knows on the call, we're going to have an official, we're going to restart because now people have live counts, all that kind of stuff. So Monday is kind of like the official kickoff. We're going to launch, not necessarily marketing, but just awareness of what we're doing. Hopefully get more people. Kind of have an official. So. What's that?
Will there be cake and confetti?
Yes, and ribbon cutting. All that, all of the above. All right. Pops.
Yeah.
We'll get yours in a second. Oh wait, I got yours. 92.63.15.
So this trader agent has different settings for the, is this the 1 minute zero take profit chart?
It is. So all we're going to do here,
Okay.
we're going to adjust your stop losses to make sure they're conducive. So if we have 20 pips price cycles, we need to have probably 65 pip stop losses so that we can run at least 3 price cycles against us. And then we need to be cognizant of that. So if we have a 65 pip stop loss, we don't, and we have a trade that actually hits 65 pips, we only want a few trades. And so I want to talk about that yesterday because there was some confusion. Cool. I think this was after you left as to when I say light, what that actually means. So, because I said, hey, everybody trade light yesterday. And I didn't really tell you guys what that meant. Like, okay, trade light. Does that mean that I lightly push the mouse button 10 times? So when I say, let me define it. So the first thing you have to know every single day that you're trading is what is your max trade allotment. Now in Alveo, it gives you that number. LMFX does not. So you have to know that before you jump into trade. What is your max trading risk allotment that you're going to be able to risk in terms of how many pips you're going to put on? Yesterday, I was trading with Patricio, and then we had the conversation about what is the max. And so I was curious on his demo account. He had a $20,000 demo account. And I was curious what the max was as far as LMFX went. And so I said, let's just start over your demo account and put you at 5,000 because he's got his live funds and we're going to do Monday. So I'm like, on your $20,000 account, let's actually see what LMX will actually give you. And LMX gave him 120 lots at a $20,000 account. So we put 120 lots on yesterday just to kind of see what the max, what the max you can do, right? As trying to prove the point, like you're not, like LMFX will let you trade 120 lots on a $20,000 account. Should you do that, guys? Anybody? Anybody have the answer to that? Should you trade 120 lots?
Is that a trick question?
No, it's a legit one for you, Cool.
Thursday's pick on Cool Day.
No. I do want it too. I hate everybody equally. I'm equal opportunity, yeah. Equal opportunity. Only if you want to show how to blow up an account. Yeah, exactly. And we did. We blew up his account yesterday, didn't we?
We did. Good.
We did. And it didn't take very long. Did not take very long to go against you to blow up 20 grand, right? So the point is, do you know what your max trade allotment is? I went over it one time with you guys, but do you know what that is? So Patricio, maybe that's changed. Andrew, do you know what your maximum amount of trade allotment that you should be trading is?
3 lots.
Okay.
Am I right?
Oh, well, yes, probably now because you're down. So yes, but when you started at 5,000, you're okay to trade 4.
4.
Cool.
Maybe I'm sorry. I was gone when you were explaining it. I just been trading at will. So the 0.10, that's not what you're asking, right?
I'm maxing. What's your max? So there's a point where, so the reason why you need to know your max is so that you know when I say go light, what that means.
So regardless, so light isn't necessarily 2 or 4. It just depends on what you're allotted.
Yeah, your maximum risk allotment. So on a $5,000
that again.
On a $5,000 account, I'm allowing you the risk allotment. I'm allowing is 4 lots. So if you're 7,200, you can increase that a little bit. So I would probably say you're not quite ready. You're not quite at 10. So you're about, I would probably say you're about 5. And when you get to 8, you go to 6. Does that make sense?
Kind of.
Okay, so we'll explain that in a second, but keep 5 in the back of your head. So 5 is your max.
Okay.
Patricio, you're back to 5 now, and again, you'll be at Monday, so 4 is your max. That
Right.
makes sense?
That makes sense.
Dad, you're at 92, so you're at 7 now. So let's say it fluctuates. You were at 8 when you were at 10. Okay, so now let's take a look at this. Same thing that I teach when we're talking about Alveo and the wobble technique. Go over this all the time. This is all about position size. So this is all about position sizing. If you have 4 lots that you can trade, and that's what we're looking at for your 5K account. When I say normal trading is going to be 2 lots. So you have 2 lots to trade with normally. Okay. So that's like, I'm free to put trades on here, there, everywhere, up to 2 lots. When you're up to 2 lots, you need to stop trading and look for opportunities to adjust your trades, to recycle your trades, to get those trades off for profit so you can put that back on. And so you can remove them and trade within 2 lots. You need to stop stacking more on. You need to hold the other 2 that you're not trading with in reserve for opportunities and or fixing your trades. Okay.
Mm-hmm.
So this is very important that you don't touch this unless you need to touch it or for an opportunity or fixing. Okay. When I say go light, that means you cut your 2 lots in half and now you're normal trading with 1 lot. And that's pretty much going to be the rule if we're in price cycles that are greater. If we're in a price cycle that is greater than 15 pips, you need to trade light, meaning you get 1 lot to trade with. And so if I want you to break up that 1 lot into 10 different position sizes, you need to be able to do that, or not position sizes, into 10 different trades. You need to be able to do that. So 10 different trades on 1 lot would be how many, what's your trade size?
0.10.
0.10. That's your trade size, right? In a $5,000 account, when you're trading light, you get a trade at 0.10 and you can put that many trades on, 10 trades on, or you can trade at 0.05 and give yourself 20 trades. It's up to you. How many trades per layer? But the main reason why you need to do this is because yesterday you guys were all struggling and I made 1% because I did this and I was able to, as it went against me, I was able to use my fix it mode because I had a layer on of, let's just for an example, if my normal layers were 4 trades per layer and going lights 2 trades per layer, when I needed to dip into fixing, I was able to put on 8 trades or a double layer at a high probability point. And those 8 trades fixed like 4 of my, probably like 4 trades, 2 layers. Does that make sense? And so I was able to fix my trades really quick and still trade without ever hitting my max risk percentage. Does that make sense? And the reason why I'm spending the time talking about it is because we're right back in the same scenario that we were yesterday, where I'm asking you guys to trade light, but I failed to comprehend that you may not know what that means. So any questions on this?
No, I just a comment from me. I think it's super important that you explain. I just made a huge note about it because okay, so now I understand the logic, the mathematical logic of size.
Yeah, and if you're not good at math, which I'm not, you need to be good at this, at understanding that if I'm light, that's 2 trades per layer. And so if I need to fix this layer, if it gets away from me, like these trades are right now in your account, Pops, if you were trading light, you could 2x, or if you needed to 4x a layer, so that if you win on one layer, it will give you the profit to get out of. If you win on this 4x layer, you can get out of a 2x trade. Does that make sense? When it pulls back and comes back. All right, now let's look at your trades. If we don't have any questions on this, right?
Makes sense.
You know, that's a good point. That's why Alvio's one click is good. And you kind of have that with Trader Agent right here. You can adjust, you can't adjust it as fast, but you adjust it for the trading that we're doing today. All right. Because you dip down under 10, you need to probably trade with a 0.15 in your account when you're not trading with me, but I'm going to go ahead and leave that here because we're now in fix-it mode for you, looking at this, and we'll start out, nothing like starting out with an opportunity to fix your trades. So, and I don't say that as a joke. I say that sometimes we learn. This is the best learning times. It's not so great when the market does everything that you think it's going to do, and it's just a great day trading. Those are awesome days, but they're not very educational days, right? Because most people are on this call because they're trying to figure out how to fix your trades when trades go bad, right? So that being said, let's do an assessment of why you traded the way you traded, and let's see if you were right. Does that make sense? And the market. So if you were right in your trades, if you were right in your calls, let me say that, but the market did what it shouldn't have done, meaning that you chose correctly, but the market did what it doesn't normally do, then you need to understand that as well. Like, I was correct in my assessment, I was correct in the way I trade, but the market did something that it doesn't typically do. That is very powerful to know as well, because if you know that, you're not going to try and change the way that you trade. However, if you're wrong, then you need to change the way you trade. Does that make sense? Dad?
Yep.
I'm talking to you specifically. Okay, so when I'm going to be honest with you guys, I woke up about 5 minutes before this call. So the first time I looked at the market, was right before this call. So I had the luxury of seeing this move, which if you were trading before this move, which you were, because you were obviously trading
all night.
Oh, you did one of those, huh? You were obviously trading up here. And so I'm assuming that you were playing this bounce right here. Or did you get in over here when it came up? So this is a major point, and I think your time will tell us. Can't lie because we have a timestamp. All right, so your worst losses are hitting pretty hard. All right. So again, I'm going to go back to the conversation that you and I had privately. Don't trade this account without me until you're ready. Does that make sense?
Yeah.
Because you need to be able to see the right calls. And I don't think that you saw the right call. And I'm going to point that out to you so that there's a learning objective, not because I know you didn't want to trade because it's embarrassing. I mean, it's embarrassing to have people see losses. Only people want to see your wins. But I guarantee you that people on this call have been in the same situation. If they're not, they will be, right? Maybe not as heavy because you're not allowed an Alveo to go this heavy, you would have been shut off and hit 5% a long time ago. But that's the thing. That's the risk that you take when you're trading your own money is now who is your risk manager, Dad? Sean's no longer your risk manager, or Ron's no longer your risk manager. So who's your risk manager now?
Me.
Exactly. And how's he doing today? How's your risk manager doing today? Would you fire him?
Getting ready to fire him.
Exactly. And it's because you're learning. And that's exactly why I have you in a demo account right now, is because you're learning, right? But if you trade a live account, I'm really, really nervous for you to be trading that without me. Does that make sense?
Well, there's no way.
I know, but I still would rather, if we're using this account, just to let you know, and goes for everybody.
I'm going to have fun.
If we're using this account or whatever your account we're using for the 5 to 50 challenge, don't touch that. Cool's the only exception, because Cool, you're just killing it. I'll allow you to do that because you know what you're doing. But
that's great.
Particularly for Andrew, Tricia, who and you know, Dad, you're just getting back into trading from taking a hiatus. I think you can get to Cool's level a lot faster than maybe Andrew can, because he's new and he doesn't have those years of experience that you do. But please don't trade this account without me. If you're going to practice and want to trade, open up another demo account to do so, right? And I'd highly, highly encourage that, Andrew, that you have another demo account that you're just practicing in, and then your account is reserved for when you're just trading with me. Does that make sense?
Yes, we can do that.
Okay, so let's take a look. You got into your worst losses at the 8:32. Is that yesterday? Yeah, that's yesterday. Or is that this morning?
Morning. Hit the stop loss.
Okay. I don't know how to do that. I don't know how to navigate MT4 as well as I do Alveo. So 8:32 this morning would have put us about. See, I don't see how you got into those trades up there, because that price wasn't at. Well, maybe the time's different between Alveo and MT4. So when it at 8:30, I don't think price was up here. These must have been trades from
been trades since yesterday.
Yeah. Oh, I got it. That's not your worst loss, because you probably went heavier. That's what I'm looking at. Okay, that makes more sense. So this is your first time you got into a trade, 14.27. Makes so much more sense now. Okay, so 14.27 would have put us at yesterday. Yep, you're right, on the other side of that. Okay.
So that's Greenwich time, right?
Right. Well, and so that would have put you like right here, right? Okay. So that would have put you getting into these trades right here. So the very first thing that you did wrong, and I'm going to say this, and again, this isn't a pick on you session, but I'm just going to be blunt and not spare. And I'm taking emotion out of this. All right. So the first thing that we did wrong in these trades is that you put a buy right here at 1400. Okay. And that, because you put a buy on, you did what every normal person does when they trade, is now I'm buy biased because I want to win on my trades. Does that make sense? And you held on to these trades longer than you should have, because you started to deploy Cool's strategy that he's going to have to start giving over to you now, right? Which is the hope.
It's proprietary, guys. Come on.
Yes.
Robin wants to know why it was wrong, Dave.
Okay. And I'm just going to explain that real fast. The number one reason why it was wrong is because when you got into these trades, you got into them over here on this time frame right here. This was yesterday, right? So this was yesterday. So you had to have gotten into them either at this point, which I think is this point. You'd have to got them into at this point, or had to have gotten into them at this point. But I'm going to say yesterday. This is where you got into them, right? Somewhere on this line that's traveling down, right? So if that's where you got into them, it's wrong because you're into buys, right? And the reason why it's wrong is because I'm not saying that the buy was the wrong decision, but where you placed them was the wrong decision, meaning that you would have had to have placed a buy thinking that it's going to bounce off of this line right here. And I'm just going to, you're wrong and you're right, but I'm thinking that these guys were right. These guys were wrong. Okay. And I don't know without actually seeing. So let me just explain what I'm thinking happened. I would have played the bounce too, because this is a good bounce point right here. And if I was holding on to these, this is your get out of jail free card. Oh, wait, I'm talking about these trades up here. My bad. So these guys were wrong. Absolutely. These guys were wrong. So you're playing the bounce right here, but you got in at the top of a price cycle on that trade. That makes sense?
Mm-hmm.
So you got in either right here or you got in right here. So if you got in here, this is right. This is at the end of the price cycle, and you got in at the bottom of a price cycle thinking it's going to bounce, but you didn't get out here when it broke lower. Does that make sense?
I didn't. Getting out is one of my challenges.
Right. So, and I'm not going to sit, we're going to get into trading, guys, I promise, but this is good education. So it broke down, it broke below. This is if you got in right here, that was wrong because you got in at the top of a price cycle. And I'm seeing that, like, I'm thinking that's the same thing you did here at the top of the price cycle. So number one rule, hard, fast rule, never place a trade in the same direction at the end of a price cycle. Just don't do it. Keep that in the back of your head. Cardinal rule, never place a trade at the same direction at the end of a price cycle, because you're just asking for punishment, right? 9 times out of 10, you're going to be in fix it mode if you do that. So what happened is it broke down here, came down, it's breaking down. The chances of it now not bouncing is the chances of it coming down here is greater than it bouncing once it crossed over. So we recognize that, and guess what? It came back up, and your action point was right here to, hey, is it going to break this and go? Or if it stalls, it's probably going to go back the other way. Well, this was your get out card right there. And you had more than one opportunity. So you had an opportunity there with that candle, an opportunity there with that candle, came down. You're like, oh crap, comes back up, an opportunity there with that candle, and then the last opportunity there with that candle. So you had 4 opportunities that the market was giving you. That is amazing. I never get 4 opportunities. I get, oh crap, I should have took that. And the market goes and went against you, right? Quick question, guys. I know we need to jump into trading. I know we're spending a lot of time going over it. Is this helpful, or should we just jump into trading? Is this helpful? I would be doing this myself if I was in trades like this. Okay. If I'm in trades like this, I go back and say, did I make the right calls or the wrong calls? Right. And if I look and if I look and I say I made the right calls, but the market was wrong, and I blame that on the market, then I'm like, I'm not changing it and I don't need to change anything. But if I look and I see, okay, I did the wrong calls, why? You learn so much more from your losses than you ever do from your wins. I mean, just hands down. And so if you, the thing that changed my trading a ton was I started studying my losses. Why am I taking a loss? Why am I hurting? Right. But particularly when you have those days, and we've all had them, where you just on Alveo, where you've hit 5%, 5%, 5%, and then your confidence gets shattered. I'm not a good trader. I suck at trading. Right. Well, no, you don't suck at trading. You just, maybe you need to fix this one or two things. All right. I did actually. That was an excerpt of Nick's diary right there. Day 30. I suck at trading. Day 31. I'm the best trader ever. Cool knows about trading in the right mindset for sure. All right. So now these trades right here, you're doing the same thing. You're seeing a bounce, right? But again, I don't know where you place your trades, but I'm assuming that if you place your trades here on this uptick as it comes down, that's the wrong place to put your trades, because that would be at the top of a price cycle. If you place your trades here on this down, that would be a good place to place your trades. So it's all about where you start. But these trades right here, I don't, this one, I don't know. We're not going to talk about it because I just don't know. But I think I hit the point home. Don't trade at the end of a price cycle in the same direction, right?
Yeah.
So why didn't you get out when it came up to here? Unless, well, no, because you put these trades on today. Okay. So these trades, you probably got in over here, I'm assuming, because these are today's trades. 10-6. These are today's trades. Did you get in right before we started trading? Okay. Yeah. So right before we got in and started trading, you thought it was going to bounce right here, right? So if that happened, then I'm going to say this was a bad place to place a trade, because again, if you're trading right here, you're trading at the top of a price cycle, or you're trading right here, waiting, or you placed them right here, but I would have waited to see if it was going to drop down and do a fib retracement off of this, because you're past 62% basically, or 61.8. I always just, in my mind, I just rounded to 62, because you see that off of this move, fib retracement, it's likely to come down. This is where I would have placed your buys, which you did there. If you did there, that was the right call, right? However, probably the wrong call, because I had the luxury. I was looking at the market at the same time you were, and I saw this turn happening. And that's where I was going to talk about 40 minutes ago, that it's most likely going to come down and test this bottom, and that we were going to get into sells and we were going to be biased. So when I opened up the market 40 minutes ago, I was in a sell bias. Anybody else in a sell bias when we opened up the market when we started?
I was.
Okay. I was in a sell bias. So by you thinking buys, that was the wrong bias, because you needed to be able to see this, and that it had crossed over this, and it had crossed over this. And so it was a sell bias opportunity. Now that it's already come down, tested, hit this, now you should see a bounce. But I'm not going to call a bounce up to here. I'm going to call a bounce to test this, right? So let's pretend that you have no trades on. Our buy, I would be into buys up to here and see if the market's going to continue the downtrend. If it crosses this, then it's going to go up to there, right? That's my bias right now. However, right now is the worst time to put a buy on. Why is it? Why now it's a good time to put a buy on? End of a price cycle. Thanks, guys. Appreciate it. All right. So now, in order to fix this, we talked yesterday about taking your power back. You have allowed the market to have power over you. right?
Yeah.
Because you're in heavier than you should be,
And
way heavier than you should be, right?
Yeah.
So now you have to take the power back from the market. There's a couple different ways that we can take the power back from the market. And they all start with this, right? That's how we can take the power back from the market when it gets away from us. But we need to be smart when we hit that so that we avoid what's called the max loss. And you've had multiple opportunities to do that here, and you failed to take that. And the reason why you failed is a psychological one. And it's not because you need to be right. It's because you don't, because as traders, we just don't want to take that big of a loss because we don't feel like we can recover from it. So we allow our losses to get bigger because we're not confident that we can recover from, let's say, if we lose $1,000, we don't feel like we have the confidence to recover from that. So we'd rather wait and see if we can't get it to come back $1,000, because that's easier for us to say the market's going to recover on that than it is to say, if I hit the red X, now I got to work out of $1,000. But you are a much better trader when you get the confidence knowing that I can make $1,000 back, right? And meaning that if I hit that red X, I could start making it. So is it better to hit that? Do you need to identify, is it better to hit that red X? I take the power back immediately. I have all of my positions back. Now I got to go fix that. And that's what we did with Patricio yesterday. Is he was down $2,500 and in his account, and I hit that red X and took all of that $2,500 loss because I needed to take the power back out of his account so that I could start from zero and make that $2,500 back, because I was so worried about those trades turning into going from 25 to 5. And I would rather start at zero and then starting at making those losers worse. So now I have those trades at my possession instead of the market has those trades, and the market's doing whatever it wants with those trades. I have those back into my possession, and I get to choose where those trades go. That makes sense?
Yeah.
Robin, that is awesome that you posted that. I think I'm going to get to that. I'm going to share that, but I'm going to look at that in a second. But thank you. I love it when you guys have aha moments and you share your aha moments. It gets me excited. All right. So guess what happened?
No guess.
No, guess what happened? It said, okay, I'm failing to break the high. I'm coming back down. I would have put a buy on right here. Maybe I got to look at the 1 minute chart. I can't trade my entries and my exits off the 5 minute chart. Okay. So came up, tested right here. As soon as it broke that, I'm knowing it's going to come down and test the bottom of that. And you could say that it doesn't have to 100% touch the bottom before it bounces again. So, all right. So what we're going to do here is we're going to look for an opportunity to take the power back, right? So I'm trying to come up with the best possible solution to fix your trades. If it breaks below here and it goes lower, this is where you take your max loss. And because this could just you could blow your account up. Right? So if this body breaks,
the stop loss again.
Yeah, well, your stop losses are way too wide for these. Look at that. That's like, this guy up here. You must not have had stops on, because that's a 100 pip stop loss. Pete is 1,000 pip stop loss. That's safe, right? Yes, Pete. Just kidding. All right. I'm not angry at this stop loss here, but I'm angry at I'm not upset about having a stop loss there at that point, because that's where I would have took those trades, because obviously it's confirmed that it's going to move down. What I would be upset about myself is that I put too many positions on up here.
Yeah.
Because I'm taking a really bad loss up here. And I'm also upset because I didn't get out of these trades too up here. Right. So those are the two biggest mistakes that I would say we made. Your get out of these trades happened right here when it broke lower, and to avoid max loss is right here where you should have got out when it came back up into that area, right? Unless this was your entry point, and if you entered the trades right here, then as soon as it broke below here, you're like, oh crap, I need to get out. You hold on, and when it fails to break this right here, that's your get out point, and you take those losses, right? Or you could have stacked more on right here, and then which I probably would have done, but I put up another layer here and then another layer here, and then as soon as it crosses that, then you're done and you're flipping into sells right there. Do you see that?
Yeah.
So again, I think we're done trying to say what you could have, should have. So let's go ahead and take these real quick. This is going to be painful for me to do, so I'm going to let you do it. Go ahead and hit the close all button.
Okay.
Yeah, I'm going to give you a hint. That's right there.
No, I know that. I just.
But we're going to wait. Well, let's just wait and see if we get one pop up. I never like taking losses. I never like hitting that red X on a price cycle against me, at the end of a price cycle against me. So let's see if we can't get a price cycle back the other way. All right. So you're at the point of you're about ready to blow your account up, right?
Yeah.
Which we've all been there. Well, I mean, Sean doesn't allow it, but if you've ever traded your own demo account here, we've all been to that point before. So most people who don't trade apiary have been here many times, who are their own risk manager. So
what is up and running?
What's that? Oh, is that a comment for us or just talking? Okay. So you see how, because you have no more trading positions, so you completely have given them power over to the market, because it is not even allowing you to put any more trades on, because you are maxed out, you're over leveraged, da, da, da. So this is a good thing for people to see. All right. This is when you have gone beyond hope and pray. And I don't know, Cool's not here, but there's got to be something when it's beyond hope and pray. The next level, you need a miracle.
Oh, Mary.
It's called Let's Take a Miracle. All right. Bum, bum, bum. So if it does not cross over here, if they do not get a body cross, let's go ahead and close out of those trades. We got the body cross. Let's see if it will climb back up to here. And if it does, we'll go ahead and take those trades. So this was a good call because we didn't max loss. We avoided the max loss. Well, we're going to take a loss, but now we're talking about what price is doing at the moment. And so we're trying to avoid the max loss at the moment. So if it fails to break this high and comes down here, go ahead and take that. Hit that close all situation. All right, for those of you guys who are actually trading, you guys should be looking you guys should have been in sell biases. So I don't know if Andrew, Patricio, you guys have been trading this morning.
No.
Yeah.
I was going Patricio.
Yeah, I have 2 cells on right now.
Okay, so
Mine's fucking running.
if you have cells on,
2.
it'd be light. So that's good because we are at a place of where it could bounce and go back up, right?
Right.
So, but it could also keep running too. All right.
All right. So what?
Again, if this closes here, if that closes there,
I'm talking to my computer.
whoever, who's that? So you can mute them real quick.
Trying to figure out what's running in the background. It's still talking. Nothing.
Love it. Hey, at least everybody's dressed on Zoom.
Well, at least from the waist up.
Yes, at least from the waist up. And that's all we care about. All right, go ahead and close all. You're done.
Also, okay.
Yeah, we're done. We're done playing with this.
Oof.
Yeah, it's a oof, right? All right. Now you have $1,000 left in your account. What do you do?
Try.
Where is it? What are you running?
Right.
What is that?
Go to the ATM.
Go to the ATM.
Do you tell your wife or not?
Yeah. that's the thing, right? All right. So the 2 biggest lessons that I need you to learn here, and I'm glad that you're learning it and everybody's learning it, is you need to learn how to take the power back from the market before this happens. If you were trading live money, you would have been fired as a trader. Does that make sense?
Yeah.
As a risk manager, you should fire yourself and say, okay, that never should happen again. Right?
Right.
Because you got to think of it in terms of taking the power back from the market. And I would have rather at this point, hindsight, right? I would have rather taken $1,000 loss than a $7,000 loss. Like that's obvious. But now that happened, we know what a $7,000 loss looks like. Does that make sense?
Yeah.
And we know we don't want to do that anymore. And I know that this is the number one reason why you didn't want to be on live, but I can guarantee you this is such a huge, valuable lesson for everybody. Instead of just talking about it, actually seeing it happen is more than just talking about it. Because talking about it, it's logical. Absolutely, I'd rather take $1,000 loss than a $7,000 loss, right? But actually experiencing it is one thing than just talking about it. All right. So I like the comment. Somebody made the comment. So let me know if you guys are going to try and fix this because I'm going to go get some popcorn.
So, Dave, I've got a question.
What?
I've got a question. You know how they say never go to Vegas with money that you can't afford to lose? Is it?
Yeah, like with rent,
kind of
money, house payment. Don't put your house payment up. Yeah, exactly.
So that's kind of what I want to do here, right? Just say, okay, I can afford to lose X amount. If it gets to that amount, then I'm done. I've got to get out for the day, right?
Yeah. So when you're trading with me, we're never going to get to that point.
Right.
I never, ever, ever let my stop losses hit my stop losses unless it's a news event that I was not cognizant about. But I think during this trading hour, we're very cognizant about when news events happen. Right. So, okay. This is another good point right here. So even though we got out right here and the market is moving up, because eventually the market's going to move up. And that was your strategy.
It was.
Eventually the market's going to move up. But that's not the right strategy. eventually the market will come back, right? And the right strategy, the right call is to get out and start to fix it. However, you were definitely, if it had popped down any more than that, you would have been, you would have lost this $1,000. Does that make sense? You were right on the edge of, if it popped down, even just had a done, you would have been gone. You would have lost that $1,000 too. So that was our risk assessment. And it got out because it curved down here. It went down here. Like, if it pops, you're done. Right. And so I'd rather keep $1,000 than say, oh, well, I'm done. Go ahead, market, take everything. Right. You know, because if this was real money, yeah, that's a hard thing to swallow. But at least you're giving yourself an opportunity to climb out of your hole, and you didn't take a zero. Now, to get back, now you got to make 7K up, and you got to turn 1K into 7K. If this was real money, you'd have to do that. You'd have to take 1 to 7, right? And that's going to be hard to do. Not going to lie. Taking 1 to 7 is going to be hard to do. I mean, I'm kind of up for the challenge, but in fact, I was thinking about that yesterday, like having different types of challenges, because not everybody has 5K that, like Andrew says, okay, never go to Vegas. I'm not going to go throw 5K down because I just don't have 5K. So I'm like, what if you could start with $100? Because LMFX actually allows you to put $100 in. What if you could take 100 to 1,000? And then what if you could take 1,000 to 5,000? I was like, that'd be an interesting challenge, because I was looking at YouTube videos yesterday, and oh my gosh, I don't know if you guys have seen some of the in this space, because I'm trying to create YouTube content that'll attract, people to our channel. And it's like, what are people clicking on? And the number one thing that people are clicking on out there is like 15K in 1 hour, made 15K in 1 hour. And I clicked on that. I'm like, how did that lady make 15K in 1 hour? Well, that was her title, but she didn't make 15K in 1 hour. She said, this is how I'm going to do it, but she didn't do it. And then another person said, I took like $11 and made 11,000. And that was their title. I'm like, there's, it's just like really like people who are, I bet Andrew's clicking on those. People that don't know any better. Right? Oh, well, you can do that. So, but it got me thinking, like, if people are clicking on, $11 or $100, then, people are like, I don't have an appetite because I'm new. I don't have an appetite to drop 5K. I don't have that appetite. Like, I really don't think, like, Andrew wouldn't say, hey, I've traded for a week. I'm going to go throw $5,000 and open up an account and see what I can do. Right? You shouldn't say that.
People are, not me.
All right, guys, let's get back to trading a little bit, because if it fails to break, we got a little pressure coming in the market. So if you are into sells and you got into sells here, I would look for it to come down here, get out of your sells. And again, trading light. If it pops down, I'd get out of these sells. I'm just thinking that it's going to come up to here and test. And if it crosses there, we could see it coming back up to the top. And I'm thinking that that's a pretty big swing. It's so much faster for me to measure price cycles in Albio than MT4, or measure distance. So if it comes back up, test that top part, it could swing up another 20 pips, right? And so I'm thinking that in my trading right here, I would like it to cross over here and start the momentum back to the top of that. Because even if it hits the top of that, you're still following trend. So the market can do that without having to make a big decision if it's going to change the trend. So if the market can run 20 pips up without changing the trend, then let's go ahead and ride that, right? However, if it fails to break above this, it comes up, tests this area right here, then it opens the door for it to come and run right back down. However, if I'm in the sells and I got into sells here, that's a bad place to be in the sells because again, if you're selling right here, if you sold right here, it's another bad place to be in the sells because it broke above here. So if you're into sells, I'd look for an opportunity to get out as it comes down right here. Unless the action on this candle shoots all the way down here, this is your action point for into sells. This is where I would get out if it comes out down, and I would get out on this candle right there. That's why I get out. Because market typically doesn't just break unless there's a news event, which I think is the CAD happening right now. Sometimes even though we're not trading the CAD, sometimes those news events can move markets too, right? But normally it doesn't break this price cycle and break through a line of decision, an action point, and break through another one unless there's news, right? So if it breaks down, comes all the way down to the next action point, it typically doesn't just have that follow through and go and ignore those decision points. So if you were into sells, the play here would have been get out here and then flip a light buy on to see if it would go up to the top of that and test. If you did that, and then that would be the play for this. But now you have to be extremely light. In fact, I'd sit on my hands right now and see if it's going to confirm that we're going to break down. Again, we're getting some wick pressure pushing us into the top. So if you did buy right there, you might want to get out if this candle stalls and just kind of, to me, I would be sitting on my hands here, or I could put a belay layer on because it's proven that it's going to bounce. So I could put a sell layer on if it does break as an opportunity to get out. I just don't know if it will, but you could do that too. And if it comes down here and stalls, get out of that sell. I mean, what is there enough meat on the bone for between here and here? Yeah, there's enough. So you could put a sell layer on right there if it does pop below to gobble up those. But it has to be a throwaway layer, meaning that if it does in fact break above this and start trading up above that, I would get out of that sell layer. So sitting on my hands is probably what I would do right now until it makes a confirmed decision. Patricio, Andrew, are you guys in any trades right now?
Nope.
What?
Nope, not for me.
Patricio, you're muted. I'm not a really good lip reader.
Sorry, no, I placed one trade at the bottom of everything, waiting for that bounce, and then I placed two trades as a ballet.
Okay.
A few seconds ago.
Okay. So you're winning on the buy because you're not out yet, right? Right. So if it does cross over, like I said, that's a throwaway layer, right? And in fact, it didn't cross over, so I'd get out. If this candle fails to cross, I'd get out of that buy because it's going to come back down and test, and it could break through. So I'd get out of the buy if you have profit.
Okay. When do you decide, even if I don't have profit?
Probably now.
Okay.
Because it failed to because you got to look at the times it's tested. So it's come down, went back up. This is a test. This is the second test.
Right.
Mm-hmm. So what's the rule of testing?
3 times.
Three times.
Yeah, but that doesn't mean it's not going to on the second time. The more times it tests, the more likely it's going to break. Right. So you have a higher probability of it breaking on the second time than you do on the first time, and even a higher one on the third time. However, if it fails to break on the second attempt and closes higher than this, chances are with a body, if it closes higher than this with this candle, comes up here and closes higher on the body, the chances are it's just going to run away from that test. Doesn't mean it's going to run completely away from the test. It could run all the way up to here and decide, I'm going to go back and test it. But the chances of it breaking and coming and running. So now that it didn't do that, and if it crosses this with the body, it means that it's coming back down for another test. So right here would be a great place to put a belay layer on, because now it's a 50-50 probability as opposed to maybe less than 50 that it's going to break. Does that make sense?
Mm-hmm.
We don't have a high, we still don't have a high probability of what we should do. Like we don't have a confirmation of anything.
No.
So the market could go up, could go down. So this is still a good place to sit on our hands.
But if you look at the 5, there's a lot of wick at the bottom.
Yeah, it should be, because this is a bounce point, right?
Yeah.
So, and 5s generally build a lot more wicks. Well, I shouldn't say that. And they get a lot more wicks on the 1, but yeah, that you should be, because that's at the bottom, right? And you should see that bounce point. All right. So we did get that, like I said, came down here, the second test, it broke above this. It says, I don't want any more part of a third test, because if it did test, it would. So now well, again, if this candle says, you broke above, but that's a false break. If this holds true in 20 seconds, then I'm back. That just switched my bias that fast to, okay, I guess it's gonna come down and break, right? But if this candle follows through with a confirmation and stays green, then I would buy. Well,
I'll have 2 seconds.
No, you don't have enough meat on the bone. So you could get into a buy and ride that up to that point. But again, super light, because we're not only trading light because of price cycles, but now we're in what I would consider a light trading zone. So a light trading zone is any time that you're in here and you're up against a major break. This is where you should be light, even if price cycles are 2 pips, you should be light in this area. If it breaks above this and trades into this zone, we could get back to normal layers, getting into normal layer position sizes, all that kind of stuff, right? Because the last thing that you want to be in is heavy and a possible break against you. Hopefully that makes sense. Good. And I think a mistake is only when we don't learn, right? If we learn.
Now I am too light. I am a one-click trader, period.
All right. So again, in order to get back to normal trading, it needs to break above that.
It's trying to break.
Yeah. We haven't really tested it yet. It hasn't come up and tested it. But everything could change like that if it does break below this. And so we don't have a whole lot of profit opportunity here. We don't have a whole lot but the risk is extremely high for buys. Would you guys agree with that?
Yeah.
Yeah.
So even though we think it's going to come up because this is a good bounce point, your risk is still really high to put buys on, because you were this close away from a break. And if it broke, you would have taken loss on your buys. So it's still high risk. The probability, the risk reward is not worth it in my mind. I still would have put a buy on right here when I told you guys to put a buy on for a ride all the way up to here to test that, maybe if there was meat on the bone. And that's the next thing. Yeah. And there would have been about 3 or 4 pips to test this action point if it does break. Because I feel like if it breaks this, it's going to run up if it breaks this red line, which it's doing right now, it'll run up to here. And there's definitely enough meat on the bone right there to run up to that point. That's under 7 pips.
Yeah, but you're waiting for the candle to break, right?
I am waiting for the candle to break.
Okay.
Or the body to form. I should say that.
Right.
Body to form above it. All right. So in your account, we cannot trade with these positions. So we're gonna use this to. I think everybody that's been in apiary, we've all traded with $1,000 accounts before. Actually, yeah. All right. So we got that break.
Close.
We were waiting for the close. Okay, so we didn't get the break. You're right. Well, I think we're going to get the break. Pretty sure we're going to get that break.
Yeah, it looks so.
So
It's extended. Yes, it's going to close up there.
there you go. Closed. So now we got the confirmation. This is the only exception to that rule where I tell you guys to never trade at the end of a price cycle, because guess what? We're at the end of a price cycle. But we also broke a layer high against a major break. So you're okay to put a buy on because it broke above that. But really, if it comes down with a candle, like if you just get a down candle, I don't think it's going to hold. This would be the better place to put a layer on. But that's the only exception to the rule of never placing a trade at the end of a price cycle, because especially if it's only one price cycle and it breaks above this, chances of it going up another price cycle the probability is greater at that point. So there's exceptions to every rule, but if you don't know what those exceptions are, then just stick with the rule. So the rule is never place a trade in the same direction at the end of the price cycle. And we broke that rule just right there, but that was because it was an acceptable breakage of that rule. But again, see that candle like I was talking about? It's just coming down. So I don't think it's going to hold. You're really early in that candle, so that just gives you another opportunity to put a layer on. So before this, just want to let everybody know that before this trading session, we had made the decision that Monday is going to be our official. Everybody's kind of got acclimated back in the market that this Monday is going to be like our official start of the journey in the 5 to 50,000. So when you open up an account with LMFX, they actually match whatever you deposit. So you put 5K in, they give you a 5K match. So you're actually trading with 10K, kind of. We're still, our risk tolerance is still at 5K, because if you lose the 5K, they immediately pull their 5K. So it's not your money until you hit certain requirements, then it converts into your money. So
what's the advantage of doing that? Why would they want to add 5K?
Well, just one second, and I'll talk about that. So everybody is going to start Monday with 10K accounts. And that's going to be their official kickoff of the 5 to 50. But really it's going to start at 10 because LMFX gives you that match. So before we even got into here, so come Monday, my dad will have a 10K account. So I'm not really worried about trying to fix this account, right? However, I'm really, really glad that this happened, because you better not trade your account without me.
Never going to happen. Never going to happen. Not with real money.
No, even fake money.
Even fake money. You're right.
Because because I'm having you on this challenge, and if this challenge is we're going to hit 50K, and I don't want you to. I don't want anybody, not just you. I'm trying not to pick on you. I just don't want anybody to say, "Oh, Dave, you got to help me. You got to fix my trades." I want to trade every day from where we left off yesterday. Does that make sense?
Yeah. So Dave, should I just keep the account that I've got open as my practice account?
Yep.
And then open a new account?
Yep. In fact, Dad, today, open up another demo or reset this demo or whatever, because I want everybody trading in a demo tomorrow for non-farm.
I'll just reset this. Yeah.
How do you reset?
I don't, I'm pretty sure it's just reset. I can look at that. All right. So, okay. So I still think it's going to come up and test this, but it's coming back and testing this. So that could still change. So now it's broken above this right here. So we're kind of back into normal trading, but the moment that it breaks below this red line, we're back to where we were, where we got to be light. We're light trading. We got to be cognizant that it could come down and do a third attempt. Don't think that's going to happen. I'm just saying you need to be at a moment's notice. If we already have that planned in our head, then we would get out of our buys if it comes down and tests that, right? And so that's going to help us to avoid taking max loss situations or really hurting ourselves, because we have already made the predetermined conclusion that these trades, I'm going to exit out of these trades for a loss if it comes back down and tests this market. Because the last thing I wanted to do is do a third test and break, and now I'm losing on this layer. Does that make sense?
Yeah.
So you always have to have a plan B, and that's our plan B. Plan A is obviously it's going to come up. This is our action point right there. Action point right there. Measure, see, I could see it coming back down and testing that. Where is over here in the 5?
Dave, I've got to go get ready for work. So
fun. Oh, it's that time. Oh, it's 8:20. Wow. I just get carried away. So I gotta tell everybody. So yesterday, yesterday morning I woke up, or no, 2 days ago. What's today? I don't even know. Today's Thursday. Tuesday morning I woke up to trade with you guys. As soon as I was done trading with you guys, I went over to boot camp, and I was at boot camp like from 9:30 till like 8 o'clock at night. Get home like just completely exhausted, but I never had an opportunity to trade my account. So I'm like, I didn't trade today, and I know I'm not going to be able to trade tomorrow morning because I'm going to be trading with the group, and I don't. And so I traded my own account at 8 o'clock at night, and I was down like $500 in that account. And so I'm like, well, I never walk away until I can fix my trades. But it got into what it typically does at night, and it doesn't move. So it didn't move until 1 a.m. And I wasn't losing anything, but I wasn't winning anything. I wasn't able to fix my trades till 1 a.m. And then what happened at 1 a.m. was the market moved. I fixed my trades, and I was just killing it. I was just like, "Ooh, that's awesome!" So I traded all night long, and I made like almost $7,000 from like 1 to 7 a.m. And then I got back on with you guys at 7. And we had what yesterday's session was a marathon session, right?
Yeah.
As a marathon session of trading. So I went from trading with you guys to the boot camp to coming home to trading all night long to going back into trading with you guys and a marathon session of trading. And then then when I was done with that, with Patricia, I think we ended our conversation like I was still talking trading. We were talking other things like at 1 o'clock in the afternoon. We were done. We had fixed it, but we were still talking trading, like 1 o'clock for me. And I was like, okay, I'm going to go to bed. And my wife's like, no, we have appointments. And so, we had an appointment. And then we went to, I had to go do the gym and do that with my wife I had a birthday party I had to do. So I ended up getting to bed till like 11 o'clock last night, but I was like trading. I'm like, that was the first time in my life I legit did a 24-hour trading marathon. I was like, I don't know if I can trade. I'm kind of burnt out, but then this morning I woke up and I'm like, let's go trade. It was crazy 24 hours for sure. All right. If it comes up and pops up, this is our action point right here. I think it's going to come up and test the top of that. So Andrew, I know you're bouncing, but how did you do today?
I didn't do anything. I was watching and learning.
Okay. So did you place the buys though? Right now, did you do anything?
No, because I knew I was going to have to take off
Bounce
pretty soon.
Okay.
So I didn't want to get in and then risk it. So,
Patricia.
Yes, I've done like $70. So I'm in a buy right now.
Yeah, today wasn't really a great trading day, so I apologize unless you guys are all trading, but we didn't trade much. But I felt like it was needed to have the conversation that we had. Right? But Guess what? You are almost. We almost got. You're at like almost 1% return.
Right.
Since I started trading with you, Dad. Look at it that way. You almost got a 1%.
Make $10, huh?
Yeah.
1%.
Way to put yourself out there, though. I mean, really, like I don't know if I would want people to see my account looking like that, honestly. So, way to go. Way to be a good sport.
No, I appreciate that, and I really appreciate it too. I don't want to. Hopefully you didn't feel like I would beat you up too bad, but I think that was really, really good education.
Yeah.
I think it was great education for everybody.
The market beat me up. I just appreciate the comment.
It's hard to learn from other people's mistakes. It's even harder to learn from your own mistakes. So
sure.
All right.
All right, guys. Thanks, Andrew. We'll see you tomorrow early.
We'll see. I don't have to do 5 o'clock 2 days in a row.
Yes. No, it's at 5. It's we're going to start at 6.
Yeah. All right.
Wow. I got a lot of messages. I think we'll do that. We'll just do a wrap up session. And I'm just going to go ahead and close out for a 0.5% gain on the day. Go ahead and get you a new account tomorrow and trade non-farm tomorrow. And then Monday we'll start with our real accounts.
Where do I get to this account? LMF.
Yeah. So if you wanted to do this, it's in trading resources. It's pinned. So I don't know if you guys know how to get there.
I don't know. I'm just learning.
Yeah, no, I get it. There's a lot of people that have never done Discord before. So, Dad, can you open your Discord and I'm going to show people real quick? Because this is a good little tool to know. So share your screen. And as you're doing that, I love your guys' comments. I missed them because now they're not timely for me to read them because you're
Dave, are they?
But they're still funny. What's that?
Are they going to be 5K or 10K accounts?
They're going to be 10K accounts because, like I said, the LMFX matches your 5K when you put 5K in. but we're still trading as if it's 5K. And so to answer your question, Dad, going back to why would they do that? Because they give you the leverage to trade at 10K. Like you can trade like you're trading at 10K. But if you trade like you're trading at 10K and like with the lot sizes and everything, you could blow your 5K account up really quickly.
Yeah.
But that's just their marketing thing that they do. So I take it because when we hit all the check marks, that 5K does become real. And so at some point in our journey from 5 to 50, that 5K will become real. And so might as well take it, right? But we're not going to trade. All of our risk assessment is going to be at the 5K and not the 10K.
So we're going to think 5K even though it says 10.
Exactly.
Got it. Okay.
So the value of your lot per pip is going to be of 10%, 10K.
Mm-hmm. It's going to be at 5 until that is real money. So our risk is saying
when they give you,
right. Yeah. You can trade they allow you to trade like you're trading as a 10K leverage or lot value, all that kind of stuff. But we're not going to do that.
I understand that. I understand that. We're not going to.
But you can, and you have that leverage. All right. So if you go here to any channel, so if we go to helpful trading resources,
Mm-hmm.
and you see there's pinned, this icon right here says that there's pinned messages.
Yeah.
You can open up the pinned messages, right? And the first one right here talks about you need to use that referral link. I appreciate it. I don't make any money from it, but what it does give me is it puts you under me so that I can see your trading accounts.
Okay.
Right? So it kind of does, that's what it does, is it attaches you under me, right?
Okay, great.
And then this was also that if you don't know how to use Discord, there's a great video.
Okay.
But almost every channel I have pinned messages, so that's just something I wanted to show you guys.
Okay, so now I understand the pin.
Yeah. All right, let's go back to comments really quick, and we'll wrap up the session. So sorry, I apologize for not a whole lot of trading today, but I still think it was a very valuable session.
I appreciate that indeed.
I love the comments. I was like, okay, well, now what we do, we close out, and everybody's like, Robin says, talk to the wife, call mommy, get a loan from your other son. He has 2 sons. So. Nick, that's a good comment, but that you've experienced something similar, maybe not to that effect, but you never had somebody break it down. And that's where the value, I think, was on today. Right. And Josh, love that comment too, that you said never risk more in one day that you can't make back in 2. That's a great rule of thumb. Absolutely. That's a great rule of thumb. Right. 1,000 is better than 0. Guys, these are great comments. So that's awesome. Let's see. Pete joins to trade and get free Dave hat. And title should be how to lose 15K in 1 hour. You probably get a lot of views on that, but nobody would want to listen to me. Yeah, you guys are awesome. I love the comments. Looking down for some actual comments. Okay, so Robin says she has an aha moment with zones. Awesome. We shall donate to the recovery. I think the donation is the comments on this because it wasn't a live account. So the donations are definitely the comments. Let's see here. I want to go back to Robin's comment and read it because I didn't get a chance to read it because we're mid-reading. So I'm going to read it. So something clicked for me today about zones. about the zones that made a big shift in my mind. Zones are an area where you absolutely want to put trades. If you're long, you want to put trades at the bottom of the zone and reverse it if you're short. Money is made when market shifts into other zones in the right in your direction. You can make some income with a zone within the zone when the market makes up its mind. If you happen to be upside down when you're long, for example, sell more at the top of the zones and then reverse and the upside short. This is the train of thought that is really helping me a lot right now. You don't need to get every candle right as long as you're within the zone and you concentrate on buying the bottoms and selling the tops while managing your position size and keep the bullets exactly. You'll come back into the money. Robin, you just explained the wobble technique.
Yeah.
So that's awesome. So you're understanding the wobble technique. That's the level one. That's what I ask people to get to the point of level one. So the next evolution, Robin, is awesome. Practice that to where you can get that down to where it becomes reactionary and not thinking about it. Then when that happens, the next evolution is how to fix and adjust your trades so that the market never has power over you, right? And that's the level two wobbler, is being able to fix your trades and have that adjustment when trades go bad, right? So I appreciate the comments. Dad, I know, I hope you don't feel like you got beat up, but is there any takeaways that you'd like to share from this session?
You know, one of the things that I didn't like about having the market have power over me is I felt like I just had to stare at the screen forever, you know, hour after hour after hour. And
yeah, it was punching you every time it went lower, right?
Yeah. And if I just take the loss and then start, see if I can make it back on the next trades, then at least I don't have to feel like I stare at it and just glued to it. I don't like that.
Yeah, I hear you. I don't like it either. And I don't allow myself to get in those positions because I've been where you're at, you know, and I've been staring at the screen for hours and hours and hours, and I don't like it. I don't like it. I like to trade, get in, get out, get done. Right. So
yeah,
I don't allow that to happen anymore. Even if it's taking a loss and walking away, I'd rather do that because it helps the psyche. Right.
Yeah.
Any Patricia, any takeaways?
The yesterday and today have been very useful in again what you said, learning that you can get the power wherever you decide you can, and of course this understanding of what really means going light and really going light, and the advantages of going light have been amazing for me these days.
Good. Okay, guys, I appreciate it. And like I said, not much trading today, but a whole lot of learning. So
do you save these videos? Are these saved?
Yeah, it'll be on YouTube. So if you guys aren't already on YouTube, please, do all that kind of stuff. Help me build that channel, because I'm starting to build up the YouTube channel. So
the YouTube is also pinned. Sorry,
the YouTube is what?
Pin is also a pin.
No, the YouTube on Discord is in the channel where he says in the under the 5 to 50 in Discord, you'll see recorded videos.
Okay, great.
And then we drop them there every time, and then that just links back to the YouTube. But if you subscribe to the YouTube channel, you'll also get notified that way whenever we drop a video, because we're going to be dropping more videos than just these. So I'm going to start building an education library. Patricia gave us some great ideas. I think I'm putting some thought into what would be kind of fun is a video series on YouTube saying, can you wobble this? And so going and trading like different instruments, like, different things. Can you wobble stocks? Can you wobble options? Can you wobble, right? And so can you wobble this? Right.
Okay.
So it'll be kind of fun. We're coming up with new ideas that we're just going to start bringing in. So if you're not subscribed, to the channel, I would highly recommend it for sure.
Okay.
Even though it's really light and it's new, it's like this week new.
Okay. Oh, that's the one where you're in a blue shirt?
Yes, you got it.
Okay, I think I got that.
All right, guys, remember tomorrow, an hour early for non-farm. We're going to trade non-farm. So if you're here at the normal time, you would have missed the movement for non-farm.
Oh, you're starting at 6.
We're going to start at 6 so that we can, if you've never experienced non-farm, it will be a good experience for sure. Make sure you're trading an account that you don't care about.
Simulated account.
All right, thanks, guys. And
right,
we'll chat with you guys later. Thanks. Bye.
Thank you.